Good morning, everyone. Welcome to today's financial morning briefing. Let's start with the key signals from Wall Street overnight. The three major U.S. indices closed roughly flat yesterday, with the Nasdaq at 26,331, the S&P 500 at 7,708, and the Dow at 53,463. The market is in a state of balance before a directional move. However, futures have turned noticeably weaker this morning. Nasdaq futures are down 0.82%, S&P futures are down 0.47%, and Dow futures are down 0.77%. This suggests risk appetite will face pressure during the Asia-Pacific session. Moving to individual stocks, there were no verified notable movers yesterday. Nvidia slipped 0.58% while Tesla edged up 0.09%, both within a 1% range. One thing I need to flag separately is that Bitcoin and Ethereum surged 10.89% and 18.53% respectively over the past 24 hours. But after verification, we could not confirm this move with reliable sources, so it remains unverified and will not be used as a basis for any sector analysis today. Related names like MSTR fell 3.53% against the trend and IBIT dropped 1.32%. The divergence between crypto assets and traditional financial asset pricing is notable. Until this move is confirmed, I would not recommend chasing crypto-related concepts. Now let's look at the global macro temperature. The 10-year U.S. Treasury yield is at 4.69%, up about 3.5 basis points from the previous session. The yield is approaching the 4.7% level again, which means the signal of marginal liquidity tightening has not been lifted. This is the core variable suppressing global growth stock valuations. The condition for this to ease would be a pullback below 4.6%. If it breaks above 4.75%, valuation pressure on global equities will intensify significantly. The VIX is at 15.79, up 6.04% on the day. Although it remains in the normal 15 to 25 range, the steep one-day jump is worth watching. It suggests some funds are starting to buy tail risk protection. If the VIX crosses above 18, risk appetite will contract further. If it falls back below 15, sentiment is repairing. The US dollar index is at 98.71. Continuing to weaken by 0.18%. The dollar is in the lower range of its current downtrend, which supports emerging market assets and RMB-denominated assets. This is one of the few clearly positive external signals right now. Watch whether the DXY can hold the 98.0 level. In commodities, WTI crude surged 2.71% to $86.68 a barrel, with Brent at $93.64. Oil is approaching the $90 mark again, which directly raises inflation expectations and puts upward pressure on Treasury yields. This is the most critical marginal change in today's macro picture. The oil and gas sector gets a clear earnings driver from this. Spot gold is at $4,532, down slightly by 0.11%, showing stagnation at high levels. Rising real yields are pressuring gold, but safe haven demand is providing support. Taken together, today's macro picture shows classic inflation trading characteristics. Oil is up, Treasury yields are up, the dollar is weak, and gold is stagnant at highs. My qualitative assessment is that risk-off is marginally dominant, but this is not broad-based risk aversion. It is selective defense driven by stagflation concerns. The condition for this to change would be the VIX falling back below 15 and Nasdaq futures turning positive, which would signal a return of risk appetite. On the RMB front, the onshore dollar-yuan rate is at 6.7124, with the offshore rate at 6.7238. The RMB remains strong. The weakening dollar index is the main external force behind RMB appreciation. The onshore rate has been trading in a narrow range around 6.71 recently, with little depreciation pressure. This appreciation environment provides positive support for foreign capital flows into A shares. On US-China tariffs, trade, and technology restrictions, there are no verified new developments today. All related items remain marked as unverified, so we will not base any judgments on unconfirmed rumors. For today's A-share market opening, my expectation is a flat open. The logic is that offsetting forces are balanced. The A-share market's own gains yesterday plus RMB appreciation support risk appetite, but falling US futures and a rising VIX are capping opening sentiment. If Nasdaq futures expand their decline to more than 1.5% after the open, the probability of a lower A-share open increases significantly. If US futures turn positive, A-shares could open slightly higher. Now for the A-share market outlook. The Shanghai Composite closed at 3,903.72 yesterday, consolidating around the 3,900 level for several sessions. Today I expect range-bound trading. Upside is limited by high treasury yields, while downside is supported by RMB appreciation and the psychological 3,900 level. If the Shanghai Index breaks below 3,880 on volume, the consolidation pattern would be broken and you should reduce positions. If it breaks above 3,930 on volume, a new upward leg would be confirmed. The Chi next rose 0.64% yesterday, showing better elasticity than the main board. But rising treasury yields are unfriendly to growth styles, so I expect range-bound trading there too, with slightly larger amplitude than the Shanghai Index. For the main sector lines, first is the oil and gas industry chain. WTI rose 2.71% in a single day, with Brent approaching $94. This is the most solid external price signal today, directly boosting earnings expectations for oil exploration, oil field services, and refining sectors. Second is power equipment and AI computing power. The Chi next strength is driving domestic tech growth. Power equipment has been a repeatedly active main line recently, with logic relatively independent of overseas markets, benefiting from domestic grid investment and computing infrastructure demand. The observation signals are that if oil prices turn lower during the session or leading power equipment names weaken at the open, the corresponding main line should be downgraded. On the risk side, I would avoid high-position optical module stocks and the computing power export chain. Rising treasury yields directly compress high-valuation growth sectors. Combined with Nvidia's 0.58% decline overnight and weak US futures, overseas mapped tech hardware lacks external support. Additionally, during this data vacuum period, theme stocks are rotating quickly. I would not recommend chasing impulsive rallies that lack volume confirmation. For northbound capital flows, with RMB appreciation and a weak dollar, the probability of net inflows today is slightly greater than net outflows, roughly 55 to 45 in favor of inflows, but the magnitude is expected to be limited. Watch the direction of northbound flows in the first 30 minutes of trading. If the VIX continues to rise above 18, foreign risk appetite will contract quickly and this net inflow judgment would be invalidated. Now let me share the stock radar scan results. The current US market status is bull, with SPY, QQQ, and IWM all above their 200-day moving averages. The risk budget is 0.8, allowing for both catch-up rally plays and strong breakouts. But this judgment is based on US closing data, which has a time gap with today's pre-market futures decline, so be careful when using it. There are 3 opportunity candidates, all with a 55% probability of range-bound strength, a 1 to 3 day time window, and the position discipline is to observe rather than chase. TWST, Twist Bioscience, in synthetic biology and DNA synthesis, is up 22.64% over the past 2 days. The current rally may be driven by biopharma sentiment, and its connection to the semiconductor hardtech supply chain is not yet confirmed, so supply chain exploration value is moderate. AMR, Alpha Metallurgical Resources, a metallurgical coal leader, is up 14.74% over 2 days and 24.95% over 5 days. The rally may reflect recovering steel and industrial demand, with exploration value for upstream resource supply chains. KC, Kingsoft Cloud, in cloud computing and AI computing infrastructure, is up 14.11% over 2 days, possibly reflecting AI demand transmitting to the cloud side, with reference value for upstream servers, chips, and optical module supply chains. The invalidation conditions for all three are breaking below the day's low or continued deterioration in market conditions. For existing positions, POET, in silicon photonics integration, has a catch-up progress of 36.2%, up 10.33% monthly, and the price is above the 200-day moving average. Continue holding, with a 58% probability of relative resilience over the next 1 to 5 sessions. The invalidation condition is breaking below the 200-day moving average. 5802.T, indium phosphide substrates, HPS.A, data center high-voltage transformers, COHR, high-speed optical chips, and AKTS, BAW filters, all remain in hold status with intact trend logic. AEHR, in CoWS packaging, has catch-up progress of 84.7% with relatively large short-term gains, so I suggest taking profits in batches, with a 52% probability of range-bound consolidation. The invalidation condition is breaking below recent support on volume. For risk-avoid names, AXTI has catch-up progress of 100%, up 38.6% monthly, with diminished valuation appeal. I suggest taking profits in batches. MSTR, despite rising 12.68% over 2 days, is essentially an enterprise software company rather than a physical supply chain player. With the Bitcoin move still unverified and low correlation to the computing hardware supply chain, it is not included in the opportunity pool. Let me wrap up with today's one-sentence core judgment. Oil prices surging combined with rising treasury yields means inflation trading dominates. The weak dollar and RMB appreciation mean A shares will likely trade in a range. Today's probability assessment is 35% for upside, 45% for range-bound, and 20% for downside. That's all for today's financial morning briefing. Thank you for watching, and we will see you at the next update.